I started putting just a few question marks out like, hey, where do you, in world of just Bitcoin, where are interest rates? And people are like, there can't be any borrowing. I'm like, what do you mean there can't be any borrowing? They're like, no, it's impossible. We're going to have deflation. I'm like, okay, we have deflation, but people are going to need to continue to borrow. They're going to need to build houses, and they're going to need to buy houses, and they're going to need to borrow money for businesses. So we're not going to stop life just because we're in this Bitcoin world. So I thought about it more, and I posted this poll. I said, where do you think interest rates are going to be in a Bitcoin-only world? And people were like all over the map. Some people said 2%, some people said 0%, some people said 6%. Other people said it's going to be extremely high.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Fred Krueger explores how interest rates, lending, and banking transform in a Bitcoin-only world. From decentralized loans to deflationary growth, his insights are groundbreaking. Let's catch him to learn more.
And, I sort of thought about it a little bit, then I basically started really this thought experiment, and this is kind of the conclusions that I came up with. Okay, so the first seems a little bit obvious, but it's actually very subtle, right? Which is short rates will no longer be determined by the Fed. So, for as long as I've been alive, or as long as my father has been alive, it's always been, don't fight the Fed. The Fed controls short rates. And Joe Carlos-Ali will say, they control the short rates, but they don't control the long rates. Very true. But they do have this complete and utter power to set the interest rate in the short term. That goes away with Bitcoin, because if we're in a complete Bitcoin world where there is no fiat, there's just one currency, Bitcoin, really central banks can't determine interest rates. So I think that at this point becomes a worldwide market for capital. And there's interest rates for various creditworthy people, but there's no sort of short-term risk-free rate like we're so accustomed to now. So point number 2 is basically we're going to have this myriad of worldwide interest rates. Some will be very low. Some people are going to be able to borrow extremely low. Others are going to have to pay a very, very high price. It really depends on who you are, what kind of company you are, what kind of individual you are, what kind of government you are. Interest rates could be all over the map.
Bitcoin's recent inability to break past the $98,000 resistance has left investors frustrated, especially following a remarkable 38% monthly gain. Despite this, the broader derivatives market paints a healthier picture, suggesting the current price action reflects consolidation rather than a decline. Traders remain optimistic, evident in the 17% annualized premium on Bitcoin futures. Although lower than the 40% levels typical of bull runs, this premium underscores resilient bullish demand rather than excessive speculation. Institutional interest continues to bolster market sentiment. Between November 25 and December 1, MicroStrategy acquired 15,400 BTC using $1.5 billion raised through stock sales, bringing its holdings to 402,100 BTC. Marathon Digital also contributed significantly, purchasing 6,484 BTC during October and November, while preparing to raise $700 million more for further acquisitions. However, attributing Bitcoin's stability solely to institutional purchases would overlook other factors. Spot ETF recorded net inflows exceeding $3.22 billion since mid-November, affirming robust demand beyond corporate buyers. Options and futures data further reinforce market confidence. Whales and arbitrage desks maintain a bullish outlook, with put options trading at an 8% discount to calls, signaling minimal hedging demand. Retail traders, often underestimated, remain pivotal to market dynamics. Historical trends, such as Bitcoin's meteoric rise in 2017, highlight the significant impact of smaller investors during moments of heightened enthusiasm. Perpetual futures contracts also reflect a balanced sentiment. The funding rate for leveraged buyers hovers within a neutral range at 1.4%, far from alarming levels. Even last week's temporary peak of 3.5% posed no immediate risk of liquidation. This steady environment underscores a market that, while cautious, remains constructive. Bitcoin's failure to surpass the psychological $98,000 barrier should not overshadow the strength of its derivatives market. Confidence from institutional and retail participants, coupled with rising adoption as an inflation hedge, highlights Bitcoin's continued potential in its ongoing bull run. The market's current consolidation phase may serve as a foundation for further growth rather than a sign of weakness.
Point number 3 is ultimately, Jeff Booth is right. Inflation's history. In a world where we are hyper-Bitcoinized, we are deflating. What's the rate of deflation? I don't know. Could be 5%. I don't know. Definitely people will save. Some people say, well, are they going to say they're not going to consume anything? No, people will still consume. We're humans. We consume. We buy houses. We send our kids to college. We do all these things. That's what we do as humans. So we're definitely not just saving. But we'll do a lot of saving, right? Especially if we know that there's no inflation and things get cheaper. Point number 4 is we're really going to be in a global world, right? So right now we have, if you're in the U.S., you care about what the Fed does. You care about the dollar. You don't really care about the yen. I mean, you might follow the yen. You might go to Japan and go, oh, wow, things are cheap because the dollar's strong relative to the yen. But, really those are two separate economies. That's not going to be the case, right? Because we are now going to be in a world where there's one currency everywhere, Bitcoin. Every business is going to have to compete worldwide for funds. Now, a business in Argentina, it may be well known to the Argentinians, but not well known to the Germans. So there will still be local lending because they understand the business better. People in Argentina may understand the value of the collateral of real estate better than somewhere else in the world. But we're going to deal with single currency, and so it's going to be a world issue.
XRP has experienced an extraordinary rally, erasing over 3 years of losses in less than a month, with its price surging over 400% since Donald Trump's re-election. As of December 2, XRP is trading at $2.50, marking its highest level since February 2018. This parabolic rise has positioned the token firmly in the spotlight, with traders speculating on the possibility of new all-time highs and even greater gains. The price movement exhibits strong similarities to XRP's 2017 bull run, when the token surged from under $0 and 1 cent to a record $3.55 after breaking out of a multi-year symmetrical triangle pattern. The current rally appears to mirror this structure, with XRP breaching key Fibonacci levels, including $0.96, $1.46, and $2.25, signaling robust bullish momentum. A decisive close above $2.82, the 0.786 Fibonacci retracement level, could strengthen XRP's trajectory toward its all-time high of $3.55 and beyond. Analysts predict even greater heights, with Fibonacci extensions pointing to potential targets near $5.64 in early 2025. Some forecasts suggest XRP could reach $6.60, a level double its previous peak, fueled by the current momentum and broader market adoption. However, caution persists as XRP is trading within a historical sell-off zone. This area has previously triggered bear markets, leading to crashes of 85 to 95% following similar parabolic rallies. If history repeats, XRP could enter a prolonged bearish phase in 2025, potentially retracing to its ascending trend line near $0.70 $1. While traders are optimistic, the market's precarious balance between euphoria and historical caution underscores the need for vigilance. XRP's future remains uncertain, but its current rally highlights the volatility and potential of cryptocurrency markets. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.